have an amazing guest panel today. We're going to be talking about open entrepreneurship and the future of venture capital. So I'll go ahead and name them, and they'll come out. First person is going to be Andrew. Welcome. And then we have Lucy. And then we have Brad. And we have Elise. Thank you, everyone, for joining us today. This is going to be an exciting panel. So why don't you start off just by introducing yourself and give us a little bit of background on each of your firms.
My name is Elise Colleen. My background is in venture capital. I worked at two of the large traditional funds in Los Angeles, and approximately a year ago started a practice called Stillmark, which is focused on investment in the blockchain and data science space and in the industries of healthcare, new marketplaces, and fintech.
So I'm Brad Burnham. I'm a partner at Union Square Ventures here in New York, and we have been investing in the consumer web and now more and more in the blockchain.
Hi, I'm Lucy. I'm a machine learning scientist turned early stage venture investor. Right now I work with Greycroft Partners and focus on investment opportunities in emerging technologies, including blockchain.
Hi, I'm Andrew Parker. I'm with Spark Capital. I'm based out of our Boston office. We have offices in Boston, New York, and San Francisco. $3 billion under management. Been in business since about 2005, investing in IT, both consumer and B2B.
Awesome, thank you. So I'm curious, blockchain, it's still in its infancy, and I'm curious how each of your firms have started to develop your thesis around blockchain. What are some of the observations? What are some of the experiments you're doing to better understand the space? Do you want to start?
Sure. So I began investing in the blockchain space in 2013, 2014, and have been interested in the area of infrastructure tech or lower level protocol tech, and in opportunities where company growth also facilitates community growth and application usership, or people's first introduction to cryptocurrency or the blockchain. When I'm investing in the space, I've realized that one of the most important things to do is to not just understand and diligence the company and its opportunity for development and growth, but to understand how that relates to protocol and infrastructure development and how it's either constrained or facilitated by what's happening in the broader ecosystem.
Trying to avoid going right down the line.
Let's mix it up.
Well, I'll talk about it a little bit. So the first time I encountered blockchain was in 2011 when I first started working as an investment associate in a hedge fund. And we were talking about foreign exchange, and Bitcoin was something that got brought up. And I became really interested in it and figured out a way to buy some. And at that time, I didn't understand what Bitcoin was at all and kind of just put this on the back burner for a few years. And when I started investing at Greycroft 2 years ago, that was when we saw a big wave of blockchain-based companies starting to pop up. And a lot of them were in the financial services space. And given my background in financial services, I knew that was something I didn't want to do. So I kind of put this on the back burner again. And most recently, I think what we're starting to see is a lot of very interesting applications being built for applications outside of financial services, and that's where we think the most interesting opportunities are. It's about facilitating decentralized collaboration when a centralized authority is not feasible in a certain kind of environment, or it's about facilitating decentralized cooperation when a centralized authority is not necessary. So we look at both enterprise use cases as well as consumer.
Great. So Spark has made one deliberate blockchain investment, and then other portfolio companies of ours have adopted blockchains in smaller ways, but they weren't part of our original investment thesis. The one investment that was intentional from the beginning is a company called Kolu, which leverages the colored coins protocol. They developed it, the founding team developed it while they're at eToro, which was another one of our portfolio companies that is in the Forex market, and just thought that blockchain was going to be a technology that was going to fundamentally change their cost structure for the better. So they got really excited about it, started researching it, wrote a white paper, and ultimately ended up spinning up a company around it that basically creates a technology that would allow municipal governments or small regional areas to do something pretty similar to what the Brixton pound did in terms of creating like a local currency that could be currency either independently floating in value or pegged in value against another currency. So that's really exciting. We want to do a lot more in the blockchain, but to be honest and answer the question, we don't have a deliberate blockchain thesis. Like we didn't customize our thesis once we saw the blockchain. We're all really interested in it. We've certainly, read, say, the original Bitcoin white paper, and the white papers you're seeing from other startups and ICOs with a lot of interest. But when we think about blockchain at Spark, we think about it within the lens of just kind of like bottoms-up adoption of a community, of an interesting new technology that enables you to do things you couldn't previously do before. That's just generally interesting to us. So that's how it fits into our larger thesis.
So Union Square Ventures has always been thesis-driven. Andrew actually at one point helped develop a thesis at Union Square Ventures. And we did a lot of investing in networks early on, Twitter, Tumblr, Foursquare, Etsy, things like that. And we had a lot of conviction about those networks because we saw it as an opportunity to sort of undo the structure of the media industry, which is really dominated by distribution, and open up an opportunity for decentralized, emergent, bottom-up innovation. And we saw this explosion of innovation in the 2006, 7, 8, 9 timeframe when a lot of brand new things came to the market, and it's just a really exciting time. Today, we feel like we're in a period of consolidation. We're now living in a world of Google, Apple, Facebook, Amazon, and we're starting to understand that the nature of the market power that those huge web companies wield is that they are data monopolies. And so we started thinking about, so what undoes a data monopoly? And we kind of realized that if an open public communication system was enough to fundamentally disrupt the media industry, what does an open public data store do? And so we started looking around for opportunities to learn more about open public data stores. And we made investments in Coinbase, Blockstack, OB1, more recently Protocol Labs, Filecoin, or Protocol Labs and Filecoin is part of Protocol Labs, but also in a couple of funds, Numerai, Polychain, and trying to get a pretty broad exposure to the market. So the reason we're in it is we just completely believe in decentralized, emergent, bottom-up innovation, and we think that there are very few opportunities in traditional web properties to see that kind of innovation. We think the blockchain presents that opportunity.
Thank you. And when we start to think about what the killer use cases are leveraging this technology, whether it exists today with an application or it needs to be built out, what do you think those killer use cases look like? Should we start at the end of the line?
Yeah, it's funny. I was talking to my partner Bijan, and his brother is a doctor, but highly technical because he runs some forums that have been around for about a decade in the photography space. So he was a very early adopter of the internet and really interested in stuff, but he doesn't think about it day to day. He thinks about being a doctor day to day. And so when he heard about Bitcoin and blockchain really early on, he asked Bijan, his brother, my partner, who does think about this stuff day to day, like, hey, this Bitcoin stuff sounds amazing. Like, should I go buy some Bitcoin? And Bijan was like, yeah, absolutely. I mean, get on board. Why not? What would prevent you if you can afford it? And he was like, okay, great. Well, so what can I do with it? And Bijan was a little bit stumped. I think that this conversation happened about 5 years ago, so it was pretty early on, but. He ended up making this analogy to the early Netscape navigator and saying that when you first got on Netscape in the beginning, the things you could do looked a lot like traditional media, but kind of smaller or more basic. But it was all kind of bottoms up. And so he tried to convey that same level of optimism about Bitcoin to his brother. I think increasingly now, especially as we're abstracting out to blockchain as opposed to just a financial use case in Bitcoin, we're going to see much more interesting use cases emerge. But I thought that was really interesting, thinking that, like, what if we're really still at that Netscape Navigator day, original state? And so that's kind of where I think we are. And when I think about the killer app, I think about the killer app of when I was first downloading Netscape and looking at, small communities organized bottom up that couldn't get published in the New York Times. And so that's where I think we are.
Yeah, I definitely agree with Andrew there that it's such an emerging space, and I'm sure there's so much potential that I can't even imagine myself. And just looking at applications that are being built today, things that get me really excited are when I imagine the days of BitTorrent where everyone is participating in this community and it's decentralized and it's incredibly awesome. And now with blockchain, we can actually start to create so much more with the model that BitTorrent was trying to do, and add monetary incentives into this model and actually provide people with different rewards as they deserve, rather than just becoming a part of a community for the sake of being a part of the community. And outside of this, where we're seeing a lot of interesting things in social good as well. I think you might have been aware that identity is a big issue around the world, especially in refugee camps. And there are projects these days that's helping refugees to create their identity and be able to track back to who they are, keep their assets even if they're in refugee camps. I think this is something that is tremendously impactful for us as a society. And you might have heard one of our companies speak today, Elizabeth from BitPesa. She is building the financial backbone of Africa by facilitating payments through Bitcoin. I think this type of applications where they're targeting extremely challenging problems in the world that just haven't been able to be solved before, I think that's where I believe the really interesting applications are.
So, somebody has once said that essentially crypto tokens are the native business model for open source. And I'd push it a little farther and say that they are the native business model for networks. There's a real problem with using equity to fund a network. If you think about something like Uber, which is essentially just a marketplace for drivers and passengers, the company now has a $70 billion valuation, which means at some point somebody thinks that they're going to be producing $10 billion worth of earnings. And the only way they can do that is either expanding geographically or expanding vertically into other markets or increasing their take rate. And they're already in the high 20s on a take rate, which means that the interests of the shareholders and the interests of the creators and consumers of value on that network are diverging fairly rapidly. The really cool thing about blockchains and crypto tokens on blockchains is the possibility that for the first time you can align the interests of the speculators who might help fund the early development of a protocol and the participants in the marketplace. So once you mediate a marketplace with a protocol, then essentially if you're buying in the marketplace, the currency in your wallet is appreciating at the same time that you're using it. And if you're selling in the market, the currency that you're receiving is appreciating. That's very, very different than the way equity models work today. And that's, I think, the killer app.
I think there's two easy opportunities for blockchain technology to both scale in impact and in use. The first is just the ability for blockchain technology to include a larger portion of the socioeconomic pyramid, the portion of the population that sits at lower socioeconomic tiers in the provision of basic products and services that folks generally wouldn't have access to. Lucy referenced this a bit, or a related area, which was the blockchain's ability to provide digital identity for folks that wouldn't otherwise have access. And because the blockchain can be applied so efficiently and can validate identity and also create security without a human operations process running behind that, it allows us to serve in products and services a larger portion of the socioeconomic pyramid. It also allows us to bring devices online to transact and to share. So I think one of the opportunities for a killer application is at the intersection of IoT and blockchain around smart nation initiatives or smart cities that we see emerging in Southeast Asia and in China, where data is collected by ubiquitous sensors and devices connected to the internet. That data can be validated and known to be true by being committed to a blockchain and can also be monetized using the same infrastructure.
Thank you. So we take a look, there's a lot of protocols being developed now. There are new currencies coming out. There are decentralized applications being built on these platforms. Where in that mix of things do you think about investing? Just curious your thoughts.
I'll start since I think I hinted at this question. So for us, like I mentioned, I think the most exciting thing about blockchain is what it's going to enable us to do that wasn't previously possible. So we like to think about the application ultimately. Currently, this is still a very nascent space, and there is a lot of focus on building the protocol. And we believe this is what's important today, being able to build the foundation of what's going to enable the proliferation of applications in the future. But we ultimately think that there is a lot of value in what you can build with blockchain once the infrastructure itself is open source and accessible to everyone in the world, because only then can you realize the full potential of blockchain. So in short, we look at a lot of the applications.
So I am going to bet that I'm the only person on this stage that was actually investing in the era that Andrew talked about, the Netscape era. Most of you probably weren't born yet. I don't know, but there was, Joey Ito, who's the head of the Media Lab, describes the internet as a belief system, and it's this belief in decentralized innovation, and the blockchain has that same belief system. And back in the '93-'94 timeframe, actually before the Netscape Navigator. There was this sense that there was something happening on the internet, and it was really exciting because it held the promise that it was going to decentralize market power and open up opportunities for people to do really creative things. And there's an enormous amount of enthusiasm and no infrastructure. And so the investments that worked at that time were investments in companies like UUNet and PSINet, basically laying the tracks for the early internet, and then the early browser business like Netscape. And it wasn't until quite a bit later, and it actually really took until broadband was available that it became mainstream. And so right now what we're looking for are those infrastructure investments, the things that put the infrastructure in place that make it possible to build the applications. And the thing that I would be looking for is, that's the equivalent, I think, of broadband adoption, is wallet adoption. Right now, there's a very small number of people. I don't know how many in the audience. Probably this is the highest density of wallets anywhere in maybe the world right now. But so until we get wallets in more people's hands, we're not in a position to really build applications and get them broadly distributed. So I think it's infrastructure first, and then moving up the stack to applications.
So I answered this question a bit in the introduction, but I completely agree. The interesting interesting and necessary value that applications will be dependent on is being built now as infrastructure tech. That's where I've been focused and also spend my advisory board time is with those companies. The next element that will evolve, and potentially from companies in the infrastructure tech space, will be easy to use wallets. I think that allow people more control over access to financial tools and their use of data with financial product and financial services.
Awesome. So we talk about infrastructure and the importance of the wallet. Another thing that we talk a lot about at Consensus is identity. And so just curious for this panel, how do you think the future of identity is going to look like, and how do you think blockchain is going to play a role in that?
Well, I think it's an open question because it's unclear whether or not blockchain protocol has to come with a sense of identity, or could it be more anonymous? And so that's a kind of governance level decision that the founders of a given blockchain implementation are going to make. And I don't think it's baked into the technology by default. I do think some sense of auditability is inherently required, but a level of anonymity or hard identity is going to be just a case-by-case basis based on the blockchain implementation.
Great.
So when we were investing early on in consumer-facing web services and networks, we had this wonderfully naive enthusiasm about how this was going to open up the market, and we were completely blindsided by the re-aggregation that took place around data monopolies, essentially controlling the data on the server side. So as we start thinking about and get excited about the blockchain and I guess what Tim Berners-Lee calls the re-decentralization opportunities that are created by the blockchain, we're very sensitive to what the re-aggregation vector is, or the re-centralization vector. And the one that I worry most about is identity. And all of the identity systems that I've seen today are systems that have some centralizing element in it. And so I don't think we have the infrastructure yet that allows for a completely decentralized identity scheme. And so the one thing I'd encourage all of you to pay really close attention to is, as you start to see identity schemes emerging, just be very conscious of the possibility of re-centralization.
To follow on that really brilliant comment, I think that understanding the trade-offs that are made when the tech is in development and engineering or development choices are made, to understand the trade-off in terms of user experience, of privacy, and just really the morality that becomes inherent in the protocol as you're making engineering decisions, is quite critical with such a powerful technology. Some of the most interesting entrepreneurs that I work with in this space are actually those that came from the early development of internet protocol and saw the trade-offs that were being made then, and have entered the blockchain space as kind of a way to correct past mistakes. Even if you're not coming from that generation of founders, I think understanding the history, especially understanding how trade-offs were made that were kind of under-optimized for the value inherent in the tech, can be advantageous for entrepreneurs in this space as well.
Great. Anything else on this topic? Great. So one thing I know is challenging, especially for venture capitalist firms, is creating deal flow and smart signals with that deal flow. And I'm just curious, what type of innovation is going to take place to make sure that you can continue to create smart signals and make great investments over time?
Yeah, I don't think I would adapt at least my own lens that I look at investing specifically to blockchain. I look for bottoms-up adoption and that kind of wait, huh moment of like, that's possible. So I think that that's still true in blockchain technology. In fact, I find myself having that moment more frequently when learning about a new company that's implementing blockchain in some novel way that I hadn't previously thought of. But that's what I'm really looking for is some kind of bottoms-up adoption. You're not going to force your way through that or fake your way through that in a PowerPoint, right? That's going to come out in talking to people in the target audience, having them grab you by the neck and shake you and say, Andrew, you don't understand. This is just a totally different experience. This is changing my life. And those are the signals I typically look for, and I don't think I'd adapt it here.
Yeah, I think for emerging technologies overall, I think the hardest part for most entrepreneurs is how the adoption process actually takes place and how to position yourself in a time when the technology is not commercialized, as well as when the technology has been commercialized. And I think it's easy for a lot of entrepreneurs to, or even for me, to imagine a world that is completely different from the one that we live in today. But I really value it when entrepreneurs can come to me and offer a very unique perspective on how that interaction is going to happen and how adoption is actually going to take shape, and being really thoughtful around the risks and the changing dynamics. Because at the end of the day, with technologies like this, every assumption we make, everything we know becomes a lever that can be pulled in the future.
One of the changing dynamics is that crypto assets or crypto tokens are inherently public day one. And so, all of us who have grown up in the venture capital industry and are used to having these sort of long 7-year gestation periods and having a very intimate relationship with a company and not having any liquidity, have all of a sudden got to start paying attention to a different set of dynamics. And particularly if we're going to directly invest, which we expect to do, we expect to directly invest in crypto tokens. And one of the things that I think you have to separate when you start investing in tokens is the speculative value from the utility value. And I'm stealing from some friends of mine who are very, very thoughtful about this space. But I think right now, almost everything that you see out there is heavily weighted towards the speculative value. And one of the things that I would be very careful of as I look at it is how much of the float is still in the hands of the protocol or the company or the people or the founders or the foundation or whoever it is that's floating the token. Because right now, I think way, way too much of the governance and the economic value is being concentrated in the hands of a very small number of people floating these assets. And so I'd be looking for really focusing on the utility value and really looking at how broadly shared the economic value is.
Did you have anything to add? Okay, perfect. So we only have 1 minute left. I'd like to close thoughts on, are there any things that you'd like to say in terms of challenging the thinking of the next generation of entrepreneurs as they think about starting their companies? I'm sure there's a lot of entrepreneurial people in here, so.
Sure. I'll say that in the blockchain ecosystem generally, I think that collaboration between teams or understanding of the challenges that exist outside of your team is even more important than in other emerging areas, because we're still so dependent on one another. So what I mean specifically by that is that if you're building an application that's dependent upon the infrastructure another team is building or one of the core development teams is building, being in open dialogue, understanding their priorities and how the decisions you make impact teams outside of your own is key for both producing goodwill, but also for the rising tide of the ecosystem that will lift all ships.
So one of the maxims of the venture capital business over the years has been that you back the jockey, not the horse. It really doesn't seem to be the case in the blockchain space, or at least I shouldn't say that. What I should say is that the classic profile of an entrepreneur that you backed in a chip or a router company or even an internet web-facing service company or consumer-facing web services company is different. And the key element is this ability to build community around your asset and to communicate broadly to a very large audience of developers who are adding value to your asset. And you get some people who just do not look the part. They're not sort of energetic and articulate and pushing. But they are inviting collaboration in ways that are really creating a lot of value. And it takes we really have to rethink what we're looking for in terms of founding teams.
I think in the blockchain space in particular, given kind of the enthusiasm that around ICOs and a lot of the cryptocurrency trading platforms, as a founder, I think it becomes more important to really understand the dynamics within this market that's going to affect how you think about the value creation that you're bringing to the table, whether or not you're going to have more think entrepreneurs have more options now in terms of where they're looking for their funding, but there are consequences to whether you're raising it through token versus traditional funding. And I think it's not just an easy question about between being able to raise quickly and through a decentralized fashion versus raising from a traditional venture fund. I think there is more consequences to where the incentives are aligned and how exposed you would be to a speculative market that's about to come. And I would just say that when I look at companies, I really want to see the alignment in thinking in terms of where they're looking for funding, how they think the market dynamic is really going to affect them as they build their companies, and how they're thinking about hedging the risk of the speculative market that we are really a part of right now.
I watched a video of one of the founders of YouTube one time talking about why did YouTube work when there was like a dozen properties before it that looked a lot like YouTube, people uploading their own videos that didn't work at all. And he said there was a group of enabling technologies, secondary technologies that all converged at the moment they founded YouTube that they weren't smart enough to really identify a priori, but nonetheless, that was the wave that carried them. And it was Flash popularization in the browser. It was MySpace distribution to take these Flash embeds and send it out all over the web. It was cameras getting video mode at just the right time, and it was high-speed bandwidth penetration. So like those four things converged to make YouTube work where there was just a graveyard before it. And so I think my advice would be, if you're a founder thinking about an idea that's failed a dozen times before, blockchain is a kind of secondary enabling technology that is going to change the game going forward, such that an idea that failed previously is now going to have an opportunity, and you're going to have that same kind of YouTube moment happen. So think about those past failures. Think about what should be revisited at this point.
Awesome. Thank you so much. Give it up for our panelists.